Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Borders, inflation, and energy. The market ripples of Trump's Day One decrees. Donald Trump began his second term with a wave of executive orders and directives that could significantly impact stock and bond markets. Below is a comprehensive analysis of key decisions, focusing on immigration, border policy, inflation, energy, and healthcare. Immigration and border policy. State of emergency at the southern border and wall construction resumption. Trump declared a state of emergency at the U.S. Mexico border and called for the resumption of wall construction. Impact on stocks. Winners. Construction-related companies like Vulcan Materials and Caterpillar may see stock gains due to potential government contracts. Losers. Sectors reliant on affordable labor, such as agriculture, hospitality, and certain service industries, may face setbacks due to reduced worker availability. Impact on bonds. Treasury yields may rise in anticipation of increased government spending on infrastructure projects. Reinstating the Remain in Mexico policy. This policy forces asylum seekers to wait in Mexico for their hearings. Impact on the economy. Reduced burden on immigration courts could improve administrative efficiency, which markets might interpret as a stabilizing factor for the economy. Tackling inflation. Addressing the cost of living. Trump signed a directive asking federal agencies to address the rising costs of living, targeting housing, healthcare, groceries, and fuel. Impact on stocks. Potential winners. Real estate developers and material suppliers may benefit from efforts to reduce housing costs. Pressure points. Energy sectors could face margin constraints if fuel price regulation is enforced. Impact on bonds. Long-term bonds could gain if these measures effectively curb inflationary pressures. Ending the Green New Deal and promoting fossil fuels. Trump exited the Paris Agreement and halted various green energy initiatives, prioritizing traditional energy sources. Impact on stocks. Winners. Traditional energy companies, including oil and gas producers, and heavy industry may gain momentum. Losers. Renewable energy firms could face reduced government support, impacting their growth prospects. Impact on bonds. Stability for corporate bonds in traditional energy sectors. Potential long-term risks if lack of climate-resilient infrastructure investments affects the broader economy. Withdrawing from the World Health Organization, WHO. Trump withdrew the U.S. from the WHO for the second time, raising concerns about global health coordination. Impact on stocks. Companies dependent on international research collaboration, particularly in pharmaceuticals and technology, may face challenges. Impact on bonds. Increased risks related to potential health crises could undermine bond market stability in the long run. Summary. Stocks. Winners. Traditional energy companies, construction-related industries. Losers. Renewable energy firms, sectors reliant on immigrant labor. Bonds. Short-term stabilization possible, but long-term risks from climate and health crises remain. Inflation. Uncertainty around the effectiveness of cost-of-living measures may create market volatility. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 Supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.